Hello, this is Nataraja. Welcome to a special mutual fund analysis. This is about hybrid funds returns by their subtype. There are 7 different hybrid funds. This analysis is as on last Friday, October 18th, 2024. So let us proceed with the presentation. This type of analysis was done 2 months back, around August 18th or so, which becomes clear. Before we get into the returns details, let us review different types of hybrid funds because everybody may not be aware of these hybrid fund types. Most aggressive returns come from hybrid aggressive funds because they are equity oriented. Typically, they invest 65 to 80% in equity, the rest in debt. Right now, the market is going through some equity correction, so you'll see some subdued returns on hybrid aggressive, but still they will be much ahead of other funds. Balanced hybrid funds, their both equity and debt are balanced between 40 to 60%. Dynamic asset allocation, also called as balanced advantage funds. Here the asset allocation is dynamic between 100% equity to 100% debt. So in this current market condition, probably this won't be doing well, simply because the equity portion is correcting and debts anyway give very low return. Whereas during the bullish time, dynamic asset allocations will be second tier compared to hybrid aggressive funds. Multi-asset allocation, investment in equity, debt, and commodity. So with at least 10% investment in each of these categories. Now the commodity funds have been doing well, much better than debt funds. So something like 27 plus annual return. So probably multi-asset allocation funds will see doing well as a second tier aggressive fund after hybrid aggressive. Then comes the two more, which are conservative hybrid, where they are primarily a debt fund. Minimum of 60 to 90% should be in the debt, rest will be in equity. Then equity savings. Here what they do is risk of equity is balanced with hedge of equity derivatives, some debt instruments too. 65 to 100% can be in equity, rest in debt. So these two can be comparable now. And the final one, arbitrage, which gives the least return, because arbitrage strategy of buying in cash and simultaneously selling in future market. 65 to 100%, though it is in equity, the equity investment here gives debt level return with no volatility. So the least returns typically come arbitrage return type of hybrid funds. Now let us look at the summary. First, let us look at the top line. Here, entire hybrid mutual fund universe, which is 217 funds, how they gave return? Minus 0.16% for the week, minus 0.3 for the month, 2.26 for the 3 months, 10.22 for 6 months, and 21.96. So all these returns are marked in amber because this is a benchmark for other subtypes returns to be evaluated against. So let us see which are the top ranking. These are arranged by the ranking. Top ranking goes to aggressive hybrid fund, followed by multi-asset, followed by balanced hybrid, followed by conservative hybrid, followed by equity savings, followed by arbitrage, followed by dynamic asset allocation. So the sad news is dynamic asset allocation went below arbitrage fund is a sad news here. Let us look at who all got the top ranking. For the weekly basis, it is arbitrage fund which got the top ranking with the positive return. And 1 month return, the top ranking went to conservative hybrid fund, still negative return, 0.12 positive return. Third, the first rank in monthly return went to balanced hybrid fund, which gave 2.7% return. And 6 months return, the first rank went to aggressive hybrid fund with a return of 15.38%. And annual return also, it is aggressive hybrid fund with 31.87%, which is impressive. Now, what I do is the various rankings here by timeline, they are all added and taken an average. Then these funds are rearranged with the best ranking on the top. So based on this, overall ranking has come. Now I have also given here the overall ranking, how it was last time. Okay. So that was 2 months back I did. And I have finally marked the ranking improvements or lack of it. So the aggressive hybrid fund is in the same rank, top one. Hybrid multi-asset allocation improved its ranking by 3 ranks. It has come up. All other ones, next 4, improved their ranking by 1. And dynamic asset allocation lost its ranking by 4 steps. Probably it was in the sorry. So it was probably in the 3rd place in the last report. So that is the key message from this. Now let us look at each type of fund. Again, here the funds that are marked in green are those which have above average return within the list for all timelines from 1 week to 1 year. The one in amber are those with above average return for all timelines from 1 week to 1 year, except for any one timeline. And another concession for amber is if either the weekly or monthly return is positive, then both are considered positive. So because they are short-term returns, so some leverage is given. Now let us discuss the one in green. Invesco India Aggressive Hybrid Fund. Annual return 42.56, very impressive. Kotak Equity Hybrid Fund 34.83% annual. Baroda BNP Paribas Retirement Fund, reasonably new. 3 months return is 4.08. UTI Aggressive Hybrid Fund annual return is 33.68. Okay, please note that overall return of aggressive hybrid funds is 2.67 for the last 3 months. So you multiply this by 4 times, you get a projected annual return which is less than 12%. So please note down that aggressive funds are not doing recently. So though the annual return average is 31.87, whatever you invest now may not give that kind of return. It may be around 12 to 15% potentially. In order for that to give very well, markets have to rebound with the good equity returns in the remaining few months, which is around 5 months left before the financial year ends. Okay. So let us look at some anyone in amber with a good return. I am checking here, all are negative, so maybe not worth mentioning, except SBI Magnum Children's Benefit Fund Investment Plan gave 0.23% for the week, though its monthly return is negative. Its annual return is still impressive, 45.35. Now we are going to multi-asset allocation. Multi-asset allocation gave 27.31% for annually and 2.2% 3 months basis, negative return for the last 1 week and 1 month. The one in green or DSP Multi-Asset Allocation Fund 29.4% for the year. Nippon India Asset Allocator FOF 31.52%. Nippon India Multi-Asset Allocation Fund 34.56. Mirae Asset Multi-Asset Allocation Fund 11.89 for 6 months. Baroda BNP Paribas Multi-Asset Fund 33.83 for the year. Kotak Multi-Asset Allocator FOF 31.05. So again, 3 months return being 2.2, annual return is projected at current rate will be less than 12%. And among the amber ones, is there anything that is worthy of good weekly return? White Oak Capital Multi-Asset Allocation Fund gave 0.5% positive return and 1.31 for the month. And Bank of India Multi-Asset Allocation Fund gave 0.3 and 1.47, but no amber color here. So it's very subdued returns here. Third one is balanced hybrid funds. Even balanced hybrid funds are negative for 1 week and 1 month basis, 2.7% for 3 months basis, 11.66 6 months basis, 21.80% for annual basis. Again, very subdued return, even if you project 3 months return by 4 times, not very impressive. There are two in green, White Oak Capital Balanced Hybrid Fund, 13.52% for the 6 months, UTI Retirement Fund, 22.67%, and nothing much to talk about. Next is Conservative Hybrid Fund, annual return average is 15.56, monthly return is positive, 3 months return 2.54, and 6 months return 8.06. Some are in green. The green ones are ICICI Prudential Income Optimizer Fund FOF 15.83 for the year, DSP Regular Savings Fund 16.42 for the year, Kotak Debt Hybrid Fund 19.7 for the year, Axis Retirement Fund Conservative Plan 20.80 for the year, one of the best among this list. And among the amber ones, the good positive returns recently are Aditya Birla Sun Life Regular Savings Fund, Parag Parekh Conservative Hybrid Fund, Canara Robeco Conservative Hybrid Fund. Now comes the Equity Savings Fund. Equity Savings Fund, again a positive for the month, 2.25 for 3 months, 8.14 for 6 months, 16.72 for the year. The one in green are Invesco India Equity Savings Fund, 23.99% for the year, Sundaram Equity Savings Fund, 20.96% for the year, DSP Equity Savings Fund, 18.32% for the year. Among the amber ones, are there anyone with the positive for recently? SBI Equity Savings Fund is positive both for the week and the month. So next we are going to arbitrage funds, which are expected to give very low returns, but at least they are positive for all timelines, 1.71 for 3 months, 3.63 for the 6 months, and 7.93 for the year. Many are in green, Invesco India Arbitrage Fund, Bandhan Arbitrage Fund, Baroda BNP Paribas Arbitrage Fund, Tata Arbitrage Fund, Aditya Birla Sun Life Arbitrage Fund, Axis Arbitrage Fund, DSP Arbitrage Fund, Edelweiss Arbitrage Fund, Union Arbitrage Fund, UTI Arbitrage Fund, Kotak Equity Arbitrage Fund, Mirae Asset Arbitrage Fund, everything typically above 8% annual return. And finally, we are coming to dynamic asset allocation. Dynamic asset allocation, though ranking is low, their returns are much better than arbitrage funds. Negative returns for 1 week and 1 month basis. The 3 months return is very subdued, worst 1.96%, but 6 months return 10.97 and annual return 25.32 because they were doing well for the 6 months and 1 year basis. The one in green are White Oak Capital Balanced Advantage Fund, 26.54 for the year. Axis Invesco India Balanced Advantage Fund, 27.80 for the year. Axis Balanced Advantage Fund, 30.53 for the year, still impressive. Baroda BNP Paribas Balanced Advantage Fund, 27.70. Among the amber ones, there are many with positive short-term return. Parag Parekh Dynamic Asset Allocation Fund, ITI Balanced Advantage Fund, LIC MF Balanced Advantage Fund. Looks like that's all. So, see what has happened here is the funds use an algorithm, right, based on the market condition. That algorithm controls the equity percentage as well as the debt percentage. Somewhere the algorithm has gone out of whack with the market conditions. So it seems to be not able to stay above the market condition and give a superior return short term. But as the equity returns, I think it is very easy for the funds to jump back to equity, and whatever they're stuck with the equity, they will also give better returns. So we will see probably dynamic asset allocation funds doing much better in the next report, which may happen in the next 1 or 2 months. So with that, we covered all the fund types. Need to discuss the standard disclaimer. This is just an analysis of fund performances, not a solicitation for investments, nor a recommendation. All mutual fund investments are subjected to market risk. You have to do your own due diligence. So thank you very much. Usually I release a blog and then release a video like this. They are available on various social network platforms shown here. And this WhatsApp group is a peer group for trading and investments. One can consider joining. So with this, we came to end of this special mutual fund report. This time it is hybrid funds. Probably I will take up debt funds in the next 1 or 2 weeks because a lot of changes come in the debt funds performance patterns since I released a debt fund report maybe another 2 months back or so. So thank you so much and see you soon.